Hello and welcome to C-Suite Secrets. I'm Heather Parsons, your host. I'm a serial entrepreneur, fractional CFO, and a business value strategist. I've spent years juggling business and family life while helping entrepreneurs scale, optimize their cash flow, and build real financial success. On our show, we bring you real conversations with founders, executives, and operators about what actually moves the needle in their business. No fluff, no filler, just smart strategy, systems that work, and insights that you can put to use in your business right away. With that, let's dive right in. Today on our show, we have John Scott, who is also another accountant. So I'm super excited to talk to you today and dive in and learn a little bit more about your business. John, welcome.
Thank you for having me. And that's how you know we're nerds, when we get excited about talking about accounting things.
I know, right? It's definitely nerdy, but wonderful and beneficial for business for sure.
It really is.
For folks who may not know you and be familiar with you, I'd love it if you could dive in and tell us a little bit about your journey as an entrepreneur and how you got here.
Well, sure. I joined Anders in 1992. I was a baby accountant, and I had had some previous accounting experience at a smaller firm while I was going to college. But Anders was a good sized firm, and it got most of its referrals from attorneys. And so we really worked closely with law firms and attorneys. And we were a smaller local firm at that time, maybe 50 people. But we've grown to 500 people, and we have people in 25 states. And we've done that by focusing on serving clients and developing our people. But early in my career, I was fortunate to meet a very entrepreneurial attorney who had a local practice here, and it was a niche practice. It was family law. And he decided that he really wanted to work on his business rather than in it. So he developed a strategy to open up in different cities. And over the course of the 17 years I worked with him, he went to 44 states and to the United Kingdom. And I was a part of his finance meetings. I was part of his finance committee. And I watched him how he paid attention to data. And once he got the secret sauce, he could go to 6 or 8 cities a year and just exponentially expand. And so that taught me the importance of paying attention to data, having good current data, and managing and forecasting based on that data.
I love it. I could not agree more. I do believe that is the secret sauce in business that a lot of people overlook. And one of the things that I also see, and I'd love your thoughts on, as somebody who's been in business for more than 30 years at the same firm, when everybody else has this shiny object syndrome today, what has kept you where you're at rather than chasing the next opportunity?
I tell my children this all the time, that I had opportunities, and they were great opportunities. They were a nice pay increase. And sometimes it's the changes you don't make that are the right move. Whitey Herzog used to coach the Cardinals, and he dealt a lot of players to other teams, but he was famous for saying, it's the trades you don't make. So when I had those opportunities to go somewhere else, my analysis was, I'm building something here. I'm part of a team that's growing. Do I really want to go over there for a 20% pay increase in the short term, or do I want to build something here that will pay off greater in the long run? And ultimately, I made the right decision, because we're 10 times the size we were, and bigger isn't always better, right? But
Right.
bigger gives you the opportunity to have a team of people and expertise that's not necessarily in your wheelhouse to call on when it's needed at the client situation. So if a client needs valuation expertise, we don't have to refer that outside of the firm. If they need help with their computer systems, we have those people. We have SALT people, we have HR people, we have a team of people that you can refer that work out and work with other people that have those skill sets, or you can build a fully comprehensive firm that can service the needs of all your clients.
Absolutely. I agree with that. And I also would love your thoughts. One of the things that I truly believe is it takes a different personality type to be an expert in different things. So like a CFO, for example, is very different on how they think from a good tax preparer. Lots of very similar things, but as you've built a firm like this, how do you manage so many personalities and different types of people to get all of this done?
Well, even in a firm of our size, we have leverage of 10 or 11 to 1. So, but you gravitate towards a group of people that you tend to work with on a regular basis. I might be working with 20 different people, but 15 of those are core to almost all of my clients. And then you have to have a good firm culture that is bought in by everyone. And that takes time. And sometimes it takes some retirements to get full buy in, right? You really have to buy into the Anders way. And we have a people first culture. We want to train and develop young people to give them opportunities to really work me out of a job, right? You come to work here because you want to grow something. Not everybody wants to be a partner, but many people that get into public accounting do. And if they're here 4 or 5 years and they've stuck it out through the hard times, they need to see that there's a path to being an owner. And we really have focused on defining that path, coaching people, and trying to bring out the best in them, make them incrementally better in whatever their skill set is. And then recognition of people have different skill sets, they have different personality types, and you have to be able to interact with those different personality types.
Absolutely. And I think especially in a multi-generational workforce, I think seeing the benefit in all of those personality types is both challenging, but it also makes it really beneficial for clients. So having somebody who has lots of experience in an industry, can help you not make as many mistakes as somebody who's brand new and maybe hasn't seen as many things. But having junior folks on the team really gives you some fresher ideas as well. So I love what you're talking about, and I love being able to manage all of that and marry it together for the client's benefit and to make it a great place to work. So, what has been the hardest leadership lesson that you've learned through your time?
Well, I'm a D personality, so I really have to soften my approach with certain types of folks. And it took me a long time to get over that. The entrepreneur I talked about early on in this conversation was very much a D personality. And I thrive on here are your marching orders, get it done. Okay. Not everyone thrives in that environment. So you have to figure out a way to let people set deadlines and then hold them accountable to setting those deadlines. And you're right, young people, even I, still make mistakes. That's why we write in pencil a lot when we're writing on paper. But people will make mistakes, but they grow from those mistakes. In fact, a lot of times we'll take certain client relationships and push them down to someone who's maybe not ready for them and even let them be the biller, because it's a low risk environment where they can learn to negotiate fees, meet expectations of a client, and it will prepare them for much bigger relationships later on because they've made those mistakes in a low risk environment.
Absolutely. And I would love to hear your thoughts just expanding on that a little bit. Growing up in a large firm and, really starting my career there, there's a difference between just hustling and working hard and
Mm-hmm.
figuring out how to have those relationships and really manage up. So, what do you see in these folks that you're giving these opportunities to? And what makes them stand out the most?
Really, it's being there, showing up and caring as if it was their own situation. There are tons of smart people who come to work and do things that are below their skill set because they're easy. That's not the person who's going to advance, but they're holding on to work that's below their skill set because it's easy chargeable time. We really don't, I mean, you need chargeable time, you need productivity, but we want is how do we do things better for the client to serve them better? And we know we're going to grow from that because they're going to make referrals or they're going to have more projects, more work for us if we can just provide results. And we really want to change the way people think about accounting. Accountants, your grandfather's accountant was historical in nature. He told you what happened. We want to tell you what's going to happen. And to that end, I know you and I do the same thing. We do virtual CFO
Hmm.
work for different companies. We focus on law firms a lot, but we want to be able to tell the law firm where they're going to go and what levers do they need to pull to get to achieve their goals, much like a GPS or Waze app would do for you if you're taking a road trip.
Right, exactly. And I think that's, again, we started off talking a little bit about the secret sauce and how some of these things play together. It's being able to identify those levers and manage the controllables that you can actually control. Because in business, there's some things that are just, you can't control COVID, you can't control some of these other things, but you can control your marketing. You can control all of these other things. You can control the return on investment that you expect for bringing in a new hire. All of those things are something that you can control, and a good CFO and somebody who's been in the business for a while can help you walk through that and understand what happens, what's the outcome with those levers if you pull the right ones, or what's going to happen if you don't. Some people are happy with their business staying where it's at, and that's okay, but there's a cost to doing that as well.
Well, and the beauty of what you and I do in our public accounting backgrounds and the CFO and working with different clients is we realize there's 100 different ways to do something.
Mm-hmm.
Whereas if you've always only been at one company or one firm, there's that firm's way to do it. But in reality, life never gives you the set of facts that you need. You have to be flexible and say, okay, how do I achieve the objective? How do I get it done?
Absolutely. My husband and I were sitting on the porch drinking coffee this morning, talking about this exact same thing. It's, whenever you start out, and I think life is this way in business and, all of the things, you never know who you're going to meet. You never know what you're going to learn. So it's that being able to pivot and really be surrounded by good people that I truly believe makes the difference.
You're right about the good people because you can then leverage, and it's more than just what you're doing. It's, hey, I've got somebody that knows this better than I do. We're going to collaborate and serve the client.
Absolutely. So, thinking about that from a talent and culture perspective, I talk to a lot of business owners who say that they can't find good people. Do you think this is really the problem, or is there something else at play?
Well, it is a struggle to find good people, but one of the benefits of us, well, two things made this happen. One was COVID, and we all went remote. And at the same time, we acquired a firm that was fully distributed across the United States. And they hadn't had an office for 10 years. So they really knew how to do remote work. And so that was liberating. Now that if we need a tax manager or an audit manager, it doesn't matter that they're in St. Louis. It doesn't matter that they don't want to come to downtown St. Louis because they can be in Oklahoma City or Texas. I prefer not California, but we do have some California employees. I prefer not New York, but any other state, it doesn't matter where they are. We can put them on the team and bring them into the fold and utilize their skill set.
Absolutely. And for folks who are listening, if you don't know and you haven't had to deal with New York or California when it comes to employees, that is a whole different ball of wax. It doesn't
They,
mean
they
there
are
aren't, yeah,
they are onerous.
exactly. Doesn't mean there aren't good candidates there and great people, but their government and their politics makes it hell for you as an employer to have people there. So, thinking about that, what is some of the fastest ways that you've seen to lose an A player, either at your company or with some of the folks that you work with?
You really have to monitor their workload because you don't want them to burn out. We went to capping hours during busy season, and my original thought was we kept it way too low. People still work beyond that to some extent. Some don't, and that's okay. The differentiation is how fast you advance and what your bonus look like, right? But you don't want somebody, when I came up in this profession, you worked 80 to 100 hours a week during busy season. And if you stuck it out, it paid off, but you weren't sure, right? And so we really get away from that. We still have a few people that do it, but they have the constitution to do it. And then I think you got to focus on quality of life year round. What's the benefit package? And you got to pay market for people, which
I
has
believe in
been
that.
going up and up and up.
It is, and I think that's where, as I work with clients and I talk to people in business, it's around what do you get? What's the return on your investment, right? Because you can usually, for a B or a C style player, you can pay less than market, just a little bit, but the output is so vastly different. It is not the same. And what we want as entrepreneurs and people coming in our business is to make sure that we're getting the return that we need. So that's why I love hiring A players. That's why it really matters that you have a way to grow people in your organization and make sure it's a good fit all around. And unfortunately, if you don't have A players, deal with it so that your A players will stick around.
Exactly, because there's nothing more demoralizing than being an A player and seeing that the firm is putting up with someone who's underperforming.
Right, exactly. So if you were starting over today, how would you build your team differently?
I would have gotten into law firm consulting much sooner. I had the skill set. I knew we worked for a lot of different law firms, both on the firm level and collaborated with them on their clients. And then, really, my experience with this entrepreneur, um, I had the skill set to help run law firms way before we acquired Summit. But when we acquired Summit CPAs, and that's all they did was virtual CFO work, they came to us because they wanted to scale into different areas. They were big in the digital marketing agency space, and they were growing at 30% a year, and they wanted to get into law, healthcare, construction, and real estate. And so we've launched those niches, and our growth has been phenomenal. We started out writing a book, How Do You Run a Law Firm, called Judicial Dollars and Cents. We do podcasts and webinars, and the calls come in, and it doesn't matter where the law firm is. I can staff it with a team of good people that know law firm accounting, which is a little bit unique. It's not really a hard balance sheet, but it has some unique challenges with the IOLTA accounts and prepaid case cost. And
Yeah.
it really is, finding the right firm that's willing to outsource. And most of them are already outsourcing something, payroll. They might have some virtual people that are offshore. So they're used to this offshoring or this outsourcing concept. It's just, you know, Betty or Joe might have been doing the accounting in house for the last 40 years, never really had any training in it, but, they know their systems.
Right. Absolutely. And I think that's where one of the things that I would love to dive in on as well is whenever you think about the size of a business and what they need as they grow, right? So if I were to say, hey, John, go work with this business that's at $500,000 a year versus go work with this one that's at $10 million a year. What are some of the first things that you would want to look at as you're working with them? And what are the key priorities to help them grow at each of those stages along the way?
The first thing I would focus on is working capital, right? And we have
Yes.
kind of a rule of thumb between 10 and 30% of your expected revenue. So at 500,000, the minimum would be $50,000 they should have in their operating account to pay the bills for the next couple months. And as they grow, if they have ambitions to grow to 10 million, that target has to grow up. And so we're going to really focus on delayed gratification, helping them understand that working capital target. And then as we grow, we have to leave money behind to feed those working capital needs. Now, we can use some debt to do it. I'm not a big fan of term debt unless it is to buy new equipment, new technology. That's fine. We can term that out. I really don't want to live on the line of credit, but I do want that line of credit there to be the safety net so that if I am short because my best client didn't pay me, then I can make payroll and not, I can still sleep at night. But the worst thing that can ever happen is to make distributions to the owners and then say, hey, we got payroll due next week. Can you give me some money back?
Absolutely. I could not agree more. And I think that is being the first thing that you look at is having some cash on hand. I agree wholeheartedly. It's super important. And I love another thing that you said, and just want to dive in there a little bit deeper, is around this line of credit situation. So the last thing we want to do is ask for money when we need money, right? So
Yep.
having that set up. So if we do have a moment where something, it's always something that you don't expect, right? So we're running a cash flow forecast. We know what our projections look like, but hiccups happen. And being able to use that line of credit at a reasonable rate rather than have to take one of these loans that ends up being at, oh, I don't know, 200% by the time you get it paid off is
Right.
the last thing we want our entrepreneurs and business owners to do. That's how you get sunk quickly. And we definitely don't want to be in that ball game.
Well, and I think not only have the line of credit, but use it occasionally and pay it off, because I'm old enough to remember '07, '08, where people had lines of credit they never touched and the banks were seizing up. So the banks would cut or eliminate lines of credit. And even during COVID, banks were shrinking a little bit. So go ahead and use that line of credit, pay it off, pay a little bit of interest, but let the bank know that they don't have this liability out here that you're not accessing.
Absolutely. That's a great thought. And for folks who do have those lines of credit and revolving, usually good rule of thumb whenever we're talking to folks is use it once every 6 months at a minimum. Because when it comes to a credit card and things like that, they do usually want to shut it off if you have no activity and it's just sitting there.
Right. They'd rather extend that credit to someone who's going to utilize it.
Right, exactly. They're in the business of making money just like we all are. One of the other things that I think is really interesting that I've heard a lot about here lately, and I want to hear your take on this, and I'll give you mine as well. A lot of people are talking about what we do is going to be replaced by AI. So I'd love to hear your thoughts, and then I'll add my flavor as well. I could not disagree more, but I want to hear your thoughts on it as
I
well.
completely disagree that it's going to eliminate our jobs as well. Look, when I got into the business, we were doing things by hand: amortization schedules, random number tables, depreciation schedules on green bar paper. And then we got PCs. Yeah, there were mainframes around, but you had those punch cards. You don't remember that. But we got these PCs that could do those things, right? And then we got VisiCalc, Lotus 123, now Google, that really, that was the first wave of AI, right? Now, AI, if we use it right, is going to replace the mundane, repeatable things to allow us to upscale our skill set and do more relevant things for the client. We're going to serve the client better because the things that we spend a lot of time on doing are going to be done for us. That doesn't mean that you just take the output and say, okay, but you've got to have a human element that reviews it. But it's going to give us additional time to do better things for the client. And it's still going to create a little bit of capacity for us to spend more time with family and friends.
Absolutely. I agree with what you're saying there wholeheartedly. And the one thing that I always challenge folks on whenever the AI discussion comes up, in particular in accounting, is how AI hallucinates. I was using it not that long ago to look up whenever the 50-year mortgage was being talked about, just
Mm,
because I knew how much we were going to have to pay on a 50-year mortgage for that slight decrease in your payment amount. So
right.
doing that calculation, and I've done enough real estate deals to generally know what that looks like. But the number that AI gave me back was wrong. It was not correct. It was off by almost $100,000. So if you don't know enough about the product or what you're working on to know if it's right or not, I think entrepreneurs can really set themselves up for some heartache because
Right.
AI has not been trained about everything, and it does like to tell you some fibs every now and then.
When it does hallucinate or fib to you and you checked it manually and you go back, I go back and I go, hey, this interest calculation you have seems to be off. Are you hallucinating? And it goes, oh, you're right. I didn't calculate it this way. I have Chiefs and Mizzou football season tickets, and I wanted to get all the games, the home games, in my calendar. So I asked it to go out and pull the two schedules for the home games only and the times that were known. And it did. And as I'm throwing it in the calendar, I went back, and towards the end of the schedule, the last 25% of the schedule, it hallucinated on both schedules. And I'm like, hey, did you hallucinate? And it said, yeah, I'm sorry. I didn't check the final schedules. I mean, it had the wrong teams, had the right
Wow.
dates. So you do have to double check things. It's going to get better over time, though.
Absolutely. I think it's great. And I think it's going to be a great opportunity for folks to level up what they're doing because you can learn so quickly by asking it questions or, talking about working on sales. It can role play with you. It can do all of these things. And I think that's wonderful. You just have to know what you're dealing with. Just
Right.
like when the internet first came out, people thought everything on the internet was true. And now we all know
But
that
none of it's
things,
true.
right, exactly. Hmm.
I think the big dilemma that we will have is how do we train the person years 1 through 4? I mean, that's a formative time in an accounting firm. And really by year 4, you're very valuable to the firm and to the clients, right? But you got all these at bats of doing things by hand or doing things in QuickBooks, doing the debits and credits. And we're going to have to, and we're working on this now, modernizing our training programs so that we can get people up to speed much quicker, utilizing AI, but still knowing the debits and credits and the things. How do you double check things by hand?
Right. And as I think about my career in accounting, there's nothing like doing a manual reconciliation to get you to understand how things work in your own business, right? And those are the things that a lot of people may take for granted, but after you go through that and you follow the trail, you know how it works without a shadow of a doubt, or if something's wrong.
Well, and I'll give you a great example of that. Accrual to cash by hand. My first partner that I worked with took me out to a construction company, and he wrote down the balance sheet on a green bar sheet of paper for the month before and the balance sheet on the next month. And he told me what income was, right? By just looking at the differences. And so that really told me that the balance sheet is more important than the income statement in reality. And he showed me how to do accrual to cash conversions by hand. Now, QuickBooks Online or QuickBooks will do accrual to cash. It's not
Mm-hmm.
always right if you didn't set up the chart of accounts right. So I will ask a person, hey, convert this to cash because we got to do some tax planning. And they'll give me this laser printed output. And I go, wait a minute, did you check it? And, we show them how to do it by hand and like, it is off. So you really need to know how to do those things manually.
Absolutely. It's going to be interesting to see how things go over the next 5 years. I don't think any profession's going anywhere. I agree with you. AI is going to make it to where the mundane, repetitive tasks aren't there anymore, just like we used to send those offshore. So now we just have to use our brain, think a little bit more, and learn.
I think it is a real threat to offshore work.
Oh, yes. Well, those are the things that are more repetitive, right? So if I
Right.
think about the offshore model, what are we sending offshore? Right? So
Mm-hmm.
those things that you don't necessarily, and I've worked with incredible people offshore who are very analytical, who think, who can do a lot of the same things I could in accounting, but some of those lower level skills, like, getting up to being a junior accountant before you become a senior accountant, that's where I think it's really going to struggle
Yep.
because a lot of that, and if you've been heavily automating, a lot of those roles are already gone.
True.
So, John, one thing that I find super interesting from our conversation before as well is that you all have had an opportunity to work with private equity and didn't necessarily go that direction.
Yeah. And we are, I'll never say never, but it is not our desire to ever sell to private equity. So what we did was, we know what the private equity offers are. Other firms have sold up to private equity, but you give up your autonomy at that point. Even though
Yep.
you may own a majority of the firm, they're still wanting their pound of flesh and their return, right? Their cash flow. And so what we did was we looked at our buyout and we said, okay, our buyout is here and private equity is here. We're going to sweeten the buyout a little bit, not all the way up to private equity because we want to be fair to the next generation of owners, but we're going to make it
Right.
a little better so that there's no real inducement to sell to private equity because I think you're really harming the next set of owners who can never reap the benefits of ownership because they don't really own anything. They're partners with a private equity firm that wants the next bite at the apple to sell to the bigger PE group. I have a bunch of clients who have rolled up into private equity roll ups, and it's been really good for them. I think it's really good for organizations that don't have a succession plan, right? Their kids don't want to do it. They don't have younger internal people that want to buy them out. That's a great solution. Roll up into private equity because you're not harming anybody that's coming behind you, and you're getting a liquidation event. But once you do that, I had a doctor group, they were making 1.5 million each, working 4 days a week, and they sold and they got a big chunk of money and some rollover equity. Now they make $500,000. They're okay with that because they got all this money up front and they have this supposed second bite at the apple, which should be a bigger payday. Although that bigger payday has been coming the last 3 years, and it's just not happening. So they'll be okay either way, but they don't work for themselves anymore. They work for the PE group.
Right. And I'd love to hear your thoughts on what that looks like from a tax perspective, because as you're talking about this doctor group, all I hear about is cap gains, right? So I'm thinking about you took this big payout and now you have this big tax bill. So we're going to hand over a lot of this money that we just got to the government because we had this event that happened. So what are your
Well,
thoughts on that as well?
that's true, but the money's enough that you can still take the cut and pay. And the rollover equity is the big play. If that second bite at the apple happens, it's going to dwarf the first payout that you got. Now, I haven't seen too many second bites at the apple happen, but that's what all the entrepreneurs that are selling say. Oh yeah, I got this chunk of money now, and I'll pay the tax. So after tax, I have X, and I can live on that. The second bite at the apple is what we're really in for. And I can see how it makes sense, right? Because if I have a $5 million tree business and all of a sudden I have $100 million group of 20 $5 million tree businesses, there is a private equity group out there that is going to pay a premium for that. But you're taking a risk.
And it's time as well, right? So how long does it take to
Right.
make that leap?
It's
So
like
that
getting your housework done. It's longer than the guy says.
right, three times as long and twice as much
Right.
usually. Hmm. Well, that's very interesting. So whenever it comes to PE and folks who do want to make that roll up, what are some of the things that they need to think about ahead of time, or maybe they haven't thought about at all, that may make that look a little less attractive?
Well, just when you talk about selling any business, whether it's to PE or to someone else, having a good, clean set of books and records gets you a premium. If it's a mess, if it hasn't been reconciled, if they can't understand anything that's going on, you're gonna sell at a discount. And I had a group that the accounting was okay, it wasn't great, but you know they paid the price when they sold because they could have gotten so much more had they just spent the time, upgraded their bookkeeper, or outsourced it to get good, clean books and records. It doesn't have to be audited financial statements, but when they come in and do their due diligence, they have to trust what they see. And if they don't trust it, they're going to pay less.
Absolutely. I was talking to a client about that this week, in fact, about the fact that your financials should tell a story. And if they don't, that makes it really hard whenever you go to exit or get a line of credit or any of that stuff. They want to see that, yes, it's accurate and that the story aligns. Because a lot of times, whenever you're working with a bank in general, they care a lot more about the story and what you're doing and is it coming to fruition than the numbers on the sheet.
Exactly. They have to believe in you.
Absolutely. And I think that in today's world, there's really no reason not to do that. And if you don't understand what it should look like, look on AI. Get a good example. Start looking there because then you'll know, okay, if this is what my competitors should look like and mine doesn't look like that, maybe I should do something different. I would never let AI do my bookkeeping if somebody's selling that I haven't seen it yet. But you can get educated and at least learn what things should look like.
That is coming, and we will have competitors out there that say AI can do your bookkeeping.
Hmm.
It's not, you're still going to need someone strong to come in and clean it up, check it, reconcile it. But there are companies out there that are going to be going to market with, you don't need a CPA, you don't need an advisor. AI can do all this.
Absolutely. And I think about that from a bigger picture perspective. So I don't know. I think about an SAP implementation that I did 100 years ago, it feels like. And you can turn on all of these automated reconciliations. You can do, the double entry matching and all of that stuff. And it works, but it is far from right most of the time. It
Well,
can get you a good bit of the way there, but you still have to look at it.
and you have to have it set up right and you have to use it right. It's like a case management system in a law firm. They can be wonderful, if you utilize them. But if you don't listen during the training, if you don't get the training and you just half ass the input, it's not going to be valuable. It's a waste of money.
Right, exactly. Garbage in, garbage out is definitely the case, and financials is no different. So, one thing that you mentioned talking about tax a little bit. So, as entrepreneurs are listening to this, what is one thing that they should start doing today? And what's one thing that they should stop?
They should stop chasing the TikTok advice, whether it's short term rentals, the Augusta rule, throwing everything into an RLT. There are bases for all of those things, but when it gets onto TikTok or Instagram, it's the absurd example. And they should start managing for the long term and not just the short term benefit. So you'll see folks go out in December and buy a 6,000-pound vehicle they don't want because the sales guy said you can write it off. Yes, you can write it off, but did you need that vehicle? So if you were going to buy it and you needed it in January, February, March, I'm okay with you buying it because you needed it. But if you just went out because you wanted to manage your tax bill, you're letting the tax bill wag the dog. And in reality, you need to say, do I really need this piece of equipment?
Absolutely. I could not agree more. I love the 6,000 pound vehicle rule, but it is not the reason to go 60 to $100,000 in debt for a vehicle that you do not need.
Do you know what a G Wagon is?
I do. Yeah.
I do not. Is it a Mercedes?
It's a Mercedes, but it's a different kind of Mercedes. So yes.
I talked a client out of getting a G Wagon a couple of years ago. He really wanted it because he was single and young, and he thought that would help him in that department with the ladies. But in reality, he was also interested in writing it off. And I'm like, Cliff, you have a car. You don't need this. We don't need to
Right.
spend the money. He had a great business. He makes a lot of money. It's a frivolous purchase to save 40 cents on the dollar.
Exactly. If he just wanted a G Wagon and that was his excuse to get one, okay, whatever. But, it's a luxury good that's not gonna, they do hold their value. I'm a car gal. I love cars, old classic cars primarily, but it's not the benefit that you're looking for. I would rather sit down with somebody like you and a client and say, okay, here's my plan for my business 10 years from now. How can I set things up along the way if this is where I'm truly marching towards to minimize my tax liability and put those systems in place? For me and what I see, it's this what you were saying a second ago, chasing things on TikTok and constantly after the shiny object rather than being very intentional about what you're working on and just moving the goalpost or moving the chains on the field every single year. So I
Yeah, and
love
let's
what you're
manage
saying.
that tax liability for the long term, not just the current year, but what does it mean
Right.
for the next year? So when you take that bonus or 179, it's not always the best choice because you might want to spread that out depending on what you think your income is going to be in the future. A lot of people will knock down income to the lowest bracket and then they'll be in the highest bracket next year, but they wasted that deduction on low brackets. Let's smooth that out so we can pay a lower rate over time.
Absolutely. And some of this stuff, I had a debate with a fellow accountant 2 or 3 years ago about bonus depreciation on some apartments that I own. It's like, I don't want to do that because you do have to pay that back if I sell it in the short term. And I don't want to be tied to holding a piece of property because I made a tax decision that will bite me later on.
Yeah, that phantom income does come back to bite you.
It really does. Well, John, today's conversation has been wonderful. I really enjoyed it. So, before we wrap up, what is one secret that you wish you would have known starting out?
Early in my career, I never imagined that I would be where I am today. I thought if I could make X per month, what else would you need? It's just been a wonderful wild ride. I wish I would have recognized that earlier and enjoyed it a lot longer. I still have some time and runway here, but I think it was a job early on and not a career. And I try and instill that in my children that pick something you enjoy doing. And I did enjoy doing it, but I fully enjoy it now, and I hope that all young people find something they really enjoy doing and they'll be successful.
I love it. That's wonderful. Well, thank you so much. For our folks who are listening, where can they reach out to you and learn more about what you're working on?
You can look on any of the social medias. I am on TikTok, Instagram, Facebook, and LinkedIn as John C. Scott, CPA. I don't give TikTok tax advice, but also at our website, anderscpa.com.
Well, thank you so much, John. And thank you to everybody for listening to C-Suite Secrets. If you have found today's conversation as valuable as I have, be sure to hit that like and follow button and share this episode with somebody who's building a business. And if your business is at the point where you're working hard and your business is growing, but you're not keeping much of your cash, that's exactly why we created our One Room. In One Room, you get your very own banker and CFO in your business to help you simplify your numbers, understand what's actually driving profit, and start making decisions like a financially minded CEO instead of just reacting. If you want more information between episodes, join us on Facebook at C-Suite Insiders or come find me on Instagram at Heather Parsons Official. Until next time, keep growing, and remember, you don't have to do this alone.